Everybody, and thanks for coming into our Tuesday night MrTopStep and Handle Stats market previews. Tonight we're going to be covering, well, Rich is going to talk a little bit about PPI, which I talked to Rich about today.
PPI, or you want to talk about PPI or CPI?
Well, CPI. I thought you were going to mention PPI.
Oh, I can look at both these. Actually, we can look at my data. Go ahead and talk. I'm sorry.
Okay, no problem. And then what we're going to do is we're going to move into Friday's expiration stats and talk a little bit about that. Pretty exciting day compared to what we've been seeing. And as you know, we've seen a really, really big drop in volume over the last 2 weeks in the S&P. I'd say that the daily average before this 2 weeks was probably about 1.1, 1.2, maybe 1.3 million contracts a day. And over the last 2 weeks, and I've looked back at this over 2 years, we haven't had a string of days where we had lower volume over a stretch of period that time. And yesterday we did 890,000 minis. Now, 130,000 of that was from Globex. So that does not leave a lot of meat on the bone when you're looking at volumes and stuff like that. But again, I think we've talked about this last time, Rich, that we've been kind of in this big back and fill pattern. And we finally broke out of it today, and volume jumped up to a little bit over 1.2 million. So we are getting a little bit more volume in here and maybe a little bit more volatility. But Rich, maybe you could talk a little bit about what do you think happened today, Rich? I know that I told you that.
Well, I said a week ago, actually, yesterday, a week ago today, actually, today's Tuesday, that I thought we were headed for a huge, huge rally. And I think I said that last week on last week's show.
Yeah.
When we talked. And what I was seeing, I use Ichimoku to kind of get an idea about what's coming, and I saw it there, and it's amazing how it's kind of working out right now. Do you mind if I show my Ichimoku chart?
Yeah, real quick. I mean, I had a discussion with Rich, and I kind of saw something today that kind of made me think that the markets were going to go up. And I wasn't there exactly when the PPI number came out, but the S&P sold off from like 52.50 down to 52.16.75. And then by the time the futures opened, we were back at 52.50. And, I said it, in my room, I put it out on Twitter. I had a conversation with Rich about this. The NASDAQ never really wanted to go down today at all.
I think the NASDAQ was stronger yesterday. It was the first time I saw it stronger in the last couple of weeks, that it was stronger than the SPOO yesterday. And,
not as strong as the SPOOs today, though.
No. Here, I was going to show you one thing. What did I say? I said the same. When I show my screen, I'll show you what I'm looking at right now. I said this morning, right when the number came out, I said this is a buy below 52.24.75, and I dipped below there and then took off. And I said that on my private Twitter feed, and kind of yelled it out to anybody who was in the room. But I don't think there was anybody at that time. But anyway, I'm looking at a really powerful rally coming. Really powerful. As powerful as what took place last November, October, November, the first couple of weeks there.
That's a pretty bold call.
And I can show you if I share my screen. Let's see let me share this. If I can, if you let me, let's see, present. Do I do this? Present slides. No, I don't want to present slides. I want to share screen. Share screen right here, share screen. And then I get to pick which one I want to do. And I want select tab, just select entire screen. And I want this screen right here. Here we go. This is my intermediate term Ichimoku chart on the bonds. And what I watched here.
Rich, your chart's not showing.
Oh. I thought I hit start sharing. Let's see. Go here. And Let me go again. Present. Let me stop screen and then present. You'll present again. Share screen. Share screen. Entire screen. Go here. Share. It says I'm sharing. There it is.
Okay, great. Now, before you talk about what we're looking at, can you explain what the chart is?
This is an Ichimoku chart. It's kind of somebody in Japan. I don't know the whole history. I used to. What you see here is candlesticks and all these elements of Ichimoku. I've actually added a few elements on here that are not normal elements of Ichimoku. It's the Rich Miller Handelstat version of Ichimoku. I've been following Ichimoku for 20 years, and I I'm able to see things like I said last week. I said actually a few weeks ago, back in April, that I thought we probably would go down and around and under before we turned up. Well, it turned out that we didn't do that. That we came through right here and started moving up. And the interesting thing is this was last Friday, right here. What was that? That would be back in here was Friday somewhere. We came in Friday and got above price here, so that was like strong support. And then here is today's action right here. Well, this bar, there's 3 of these bars for every day, and here's tomorrow's bar, and this lined up just perfectly. So tomorrow morning, when that number comes out, and price is up here, we're going to be going over the top of price. Well, and this is one element called the Chiku span, and when it goes over price, that means price is support for this level, and it certainly looks like that's going to happen. Plus, the other thing that's going to happen when this comes in tomorrow is the bottom of this cloud is going to move up, so that's going to be putting support underneath here even more, and that's why I've been saying for a while. I thought interest rates, especially here, are turning up, and it'd have to be a hell of a surprise at this point in time to make them go back down. So this cloud's going to start going up really quickly, and the way the elements of the ES and NQ chart are, they're going to do the same thing on this chart. Here's what we did. I'll go back here a little bit and we'll take a look at this. I think I have this here. I can go back to here's last October, the end of October, when we came down, and this chart, it did the same thing here. It turned up and it got a real strong up move here on the cloud supporting it. And we had a hell of a run for a long time, and then it turned back down. Well, now it's basically we've come down here, pulled back. And this is the same pattern taking place right here, that this cloud has actually started to move up already. And you can see here today it moved up, and now the next few days, because this is already here, it's already moved up here. This cloud in front is going to keep going up, and it's just going to boost the energy of the up move. This is a really strong move here, and it's going to continue on because the cloud's going to keep it in tow for a little while. So we're absolutely going to make new highs. We're going a lot higher, and a lot higher, real quick, because this is as just the same way that was back in November last year, October, November. I mean, we started out down here at 40, 41-ish, 100, and over by the end of the year, by December we were up here to 44, and the end of the year we were up here to 46. Now I don't think this move is going to be as strong as the entire move that we had back then, but certainly the first couple of weeks here that are coming are going to be practically as strong as this move was here. So we are absolutely going, unless there's some big surprise with that number tomorrow, and I think the market's already telling us that's not going to happen. It's been telling us that for a couple of days. So, and here's the NASDAQ. This is my intermediate term NASDAQ, and it's the same thing. This we've got a real strong move here. This price has already started to move up because these are markers of where this is, and it's going to move really quickly in here, and that's just going to push this and add fuel to the fire for the NQ and the ES to go up. And I think the bonds and the notes are, they're kind of saying that they're going up, and they're not going to be as strong, but it's certainly going to be a big move here. And I've been looking at that for quite a while, thinking that was going to be the case. And I'm fairly sure that I'm going to be correct on that. I have, I know Danny was talking about May. So I have the May stats here. This is the May cash stats going back to, if I can get on here and get this going. Let's see what here. This goes back to 1970. These are the monthly stats. May since 1970 has been 23 or 34 up and 20 down, and it's contributed only 293 points to the S&P over that entire time period. And you can see that we've had 4 up Mays in a row, right? Prior to this year, 2020, 2021, 22, and 23 were all up. We had a big down one in 19, but overall, May has been, the last 10 years they've only had one down May, and typically in the second quarter, the best month is April, and May is not the best month, but this is obviously a change from what we typically have. And the second quarter is, the fourth quarter is the best quarter of the year always, but the second quarter can be sometimes. I've got quarterly stats on that too, but this is my quarterly stuff. So I took a look at the 10 best second quarters since I think this goes back the same way back to 1970. 10 best second quarters. There's been some really good ones. We can look by points, or let's look by percentage here. Escape. I don't know why that's doing that. Didn't mean for it to do that. Oh, clicked on this other chart that I'm building. Let's go here by percent. Let's rank these by percent. There you go. Second quarters by percent. 2020 was up 19%. I don't think we're going to be anywhere near any of these, but there's been some pretty, even in 2021 and 3, which were both up months in May, that the quarter did pretty well. So, not to say I don't. This definitely could be a good. I think it's going to make a new high this month, for all-time high. Obviously, with what we're doing, and the all-time high right now is 52.6485, and that's going to come out by a lot, I think. Danny, are you still there? I want to show something else here. If well, I guess I don't know if Danny's still here. Or
I'm here.
Oh, okay. So you can see I was looking at the quarterly data here, and we've had some, even the last 2021 and 2022, we were up 8% in the second quarter. Both 2021 and 2023, we had 8% second quarters up, and I mean, this could be a good quarter too. I mean, we started out pretty rough, but it's going all right now. And I'm going to, you wanted to see that SPX monthly. Oh, my event day. Here's my event day thing. I just updated this today. I got a new computer a week and a half ago, and I've been moving files over and updating stuff. It's kind of a long process, so I'm not completely caught up by any means, but I did manage to get this the CPI and the dates of the CPI and whatnot updated here. So here's the day of CPI for what the market's done on the day of CPI since 2008. So let me, oh, come on, get in there and do that. There you go. Scroll down here and we'll take a look at this. I got that. Okay, go. It should, it's not, why is that not doing that? Select all. Go here. Let me clear this a second. Clear here. It is clear. CPI, I just did this. There you go. I should have unchecked it instead of checking. Here's CPI. Go back here. CPI since 2008 has actually been, overall, it's been an up day, slightly up just for all CPI days. 112 up, 81 down out of 194. But if we look at May alone, we can do that right here. Since 2008, I already looked at it's got a horrible record, up 4, down 12, not too good, and so you would not expect it to be up. We can look at what happened the day after in 1 second, but let's go back here and get rid of the May real quick. I want to see what we've been doing in the last year and a half or so. Let's just look at 20. Let's clear this all and look at 2024 and 2023. So since 2023, CPI overall up 10, down 6. Obviously, the Mays, there's only been a couple that were up. So it's still got a positive bias. And the last one was down. So let's go back and look at the. I'm going to clear this out real quick here, and I'm going to go back and we'll look at the day after May CPI. Let's see, clear this. I'm going to clear all this and grab that, and we'll see what to expect on Thursday. Go down here again.
So basically, CPI day itself is not a particularly bullish day.
It's not a particularly bullish day, but I'm telling you, tomorrow's going to be the exception.
All right.
The stats on these days. I mean, obviously, there are. Let's go here. That's day of, and let's look at the day after, and then we'll look at the day after in May. So if we go here, this picks up the day after CPI. And this is all the days after, and then I just got to go to filter it for May. So day after CPI tends to be pretty bullish too. It's also slightly positive, and that's slightly higher than normal expectations for just every day. Let's see May in particular. MA1 enter. Ooh. Also not good. The day after has been pretty negative too, and I know I got that in there right. Let's look at the that should be. I'm going to slide down here again and look at something else. CPI day after. I'm going to clear this out, clear, and we'll just look at both of them combined. Day of and day after. I have the day before and the day after. Oh, well, we could look at the day before and the day after and see if there's any pattern there. As I say, I just updated this program, and I haven't finished all, coding everything that goes back in here because I added a bunch of stuff to this program. I'm anticipating using it a lot more. Um, yeah, the day before, let's see what's going on here. Day before, even when the day before is up, the day after has been down quite. I mean, there's only a couple times. There's only one time when the day before was up, like today, that the day after was also up, and that was in 2018.
Well, does that change your view at all?
No, it doesn't change. This still, even though this study is, is very bearish, is very bearish. When I look at the cloud and see what's going on, and I've been saying for a week that this is what was going to happen, and I actually have a level here. A daily close above this level right here is really going to kick us off, and that's 52 70 74.90, and I've had that on my chart for since last week. I put that on there last Thursday, Friday after the run up, and we've kind of ran it through here and been chopping around. And here was this morning, that, and I had this. That's where I put out on the private Twitter right before, or when the number came out. I said, below here it's a buy, absolutely, because this is a really strong number for me. All my levels are color coded, and we stopped today up here at this gold level once, and then this stopped here again, and then of course that Chat GPT news came out that drove the market up. But this was I was anticipating higher prices, and I'm still anticipating much higher prices. This I think might be a target for tomorrow. This 53.04, and my ultimate target is much higher. A lot higher.
Well, Rich, we kind of jumped around a little bit.
Yeah, we did.
What I wanted to do is I wanted to put up the Stock Traders Almanac chart and kind of the verbiage that Jeff put out, and kind of explain to people why his study and your study is different. Can you do that?
Well, I mean, I think in certain, if I looked at that study, and if you want to pop it up there and reiterate to everybody what the study says.
All right.
And then we'll talk about it.
You want to take your chart down real quick?
Do I guess I have to do that, don't I? Stop screen, stop right there. There you go.
Okay. So, one of the things I want to say is that I'm always looking for ideas. And when I first started on the trading floor, or not, I don't want to say when I first started on the trading floor. I want to say after I started on the trading floor and I met Marty Schwartz, he was probably very instrumental in a lot of different things that I look at, but very instrumental on statistics. And, Jeff's a great guy, but I think that Rich's stats are much more in depth. But basically, it says that Friday's OPEX. So basically, what you've said is, even though the stats are not good for the day before CPI, they're not good for PPI. They're not good at the day of CPI,
right?
And they're not good the day after CPI.
They don't appear to be.
And then we go into this on Friday, where here, let me pull down my. Basically, I can't really read what it says in there, but let me take down my.
Well, here's I'll have one comeback on that, Danny. April is usually the best month of the second quarter. It's better than June and better than May, almost all the time. And that's one stat. I mean, April was a down month this year. And I certainly was expecting some range, but I wasn't expecting April to be as bad as it was. So and I did expect a higher high at some point in time in the second quarter. So that tells you, I mean, statistics are there's a reason there's statistics. There's always a possibility of a more rare event taking place, or lesser probability of something taking place. And this is one of those times where I'm depending on my other chart levels and saying the statistics say that it should do that, but this time they're wrong. This is one of the times where I would never have been short, today, knowing that tomorrow is such a bearish day, like a 75% probability using just the looking at CPI alone, that it was going to be a down day.
Right.
What I'm looking at and seeing in the charts is completely different. And
well, for those people that maybe have not seen this before, it says since 1990, the May monthly option expiration, that's the week 3, right? That's the third Thursday.
Right.
It has been slightly bearish bias with the Dow Jones and S&P, down 18, up 16. But more recently, Dow Jones suffered declines 12 out of the 15. And then it goes on to say that the S&P has an additional weekly gain in 2009, but it's still up 11, down 15, and the NASDAQ is up 9, down 15. So these are not great stats. I mean, I'm not saying that the market's not going to rally, but I think there's a lot more risk in here than just saying, hey, we're going straight up. Now, I don't disagree. I think what my own opinion is that today was very, very telegraphed that you get this big down move early, and then Powell comes out and says that they're looking for a September rate cut, and the markets go, they just go straight up. Yeah, and Market Trader, I agree with you. Market Trader asked you a question, but we'll get back to that in a minute. The thing is that I think you got to be prepared for maybe a little of what we saw today. Maybe we don't fly out of the chute going higher. Maybe the data hits, the markets pull back. But in the opening print today, I said, if the markets open lower, I want to be a buyer. I'm with you, and I'm not just going along with your work, but I think after 2.5 weeks of going sideways and low volume, we could get a big pop. And I agree with that, but I'm not sure it's just going to be as easy as, I'm just not sure it's going to be as easy. The next 3 days are just going to be blasting up without a little bit of heat on the way up.
I don't know how it's going to transpire, but I certainly see I see it going to the upside as strong as it did last year. It last October, the end of October, November. That's what I see. I've been saying that for a week and a half now, and I know the stats for these times are definitely when you look at the OPEX stats, and I actually downloaded all the OPEX. I'm doing another study in a different way, and to satisfy answering that question about what happens. And this is one of the things I'm doing. So I actually went in, and this is the Dow. I started on the S&P, but I'll have this study done and at some point in time. But because last week you asked me how often has the let's clear this real quick. How often has the Dow had 8 days in a row up? And I looked and said I looked at the chart without having done a study. This study I look at 10 days here, but then I went out here and actually did the numbers on it. Let me go down here and slide down here. So this goes back to 1970. So there's 13,712 days, 711 days in here in this study, and these are the times right here that the that's the wrong one. Let's keep on going out here. So in those 13,710 days, there has been 1,578 times that the Dow was up just one day straight, 860 times that it was up 2 days in a row, followed, but preceded and followed by down day. So these are mutually exclusive events, because I wanted to do that that way, and and on and on. So you can see that 8 days in a row has actually happened 13 times since 1970. Not a lot. It hasn't happened, so that's not a lot of times. But the most times that we've had up days, this is up. I don't have the down statistics yet. Is we had 2 times that were 13 days in a row up.
Are you Rich? Are you showing your stuff right now?
Oh no, I'm sorry, I didn't show that. Actually, I'm glad I didn't share all of it, because I showed some stuff. Let's see, share screen. Go here.
Hey, Marlon, if you could pull down. Yep, thanks.
Let's go here, right here. So what I did with this study, this is just of the Dow. I'm going to do the same thing in the S&P. And right now I looked at the streaks of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, up to 13, because that's the most days that there we go. That's the most days that the Dow has, and it's only happened twice where it's had 13 days in a row. And it's had 2 times where it's 12 in a row. Now these are mutually exclusive events. That means that this 12-day, these 11 and 12-day events are not counting, not saying, oh, this was 12 days and then 13. No, these were 12 days here and 13 days here. So if you understand what I'm saying, I hope I'm saying that right. Anyway, and so that's the 8 days has happened 13 times, and that's been 104 of the up days were, these part of these 8-day streaks. And as you see, going down, there's obviously the numbers increase, and I see some kind of funky things about the increases in numbers and the size of what's going on there. But I'll keep that's room for another study. But I wanted to do that, as I say, to kind of like take a look and see what happens. And then I built this. What I did was I built this thing now that I can look at. And this actually, when I go through here, I can say, I can go through and choose up or down days, and then it will automatically, I haven't put the stats down here, it will automatically tell you the probability of the following day being an up day or a down day.
That's great.
So that I will be working on. And as I say, I fixed this already, and it's going to be kind of interesting. So if like today was an up day, and was the Dow up today? Probably. Oh, let's see. The Dow was up today. It was 0.32%. So prior day down. So let's see, this was a repeat Dow up. And I don't know. I mean, so this automatically, and I don't have this. As I say, I don't have all the numbers put in here, but it will tell me what the probability is when I put the equation to it of what the following day, whether it's going to be up or down. And I've got to do some more programming to do that, but then I'll have this thing for a long time. So, and the other thing that I'm going to be able to do with this, besides telling the probability of whether the next day is going to be up or down, I'll be able to differentiate by looking at the day of the week and saying, well, if today was a Tuesday and it was an up day, it'll give me, and actually, I'm going to have to. There's another thing that you have to program in here. You have to program the hierarchy of what you want to look at. So I think I'll look at, I have to change that, because I just have one part of that program now. If you understand what I'm talking about, when you do conditional formatting, there's a hierarchy of how it works, and I only put the day being up or down, not the day of the week, and so that's like picking up. It's still conflicting with making the decision. But when I get through, anyway, point is when I get through, I'm going to be able to say, if the streak starts on a Tuesday, what's the probability of the next day being higher? I'll be able to do that by the month, and then by the day of the week. So I'm this. It is.
Well, there's more work to be done, but let's talk real quick about where you are in the process right now. You've got more than 15,000 hours of coding.
Absolutely.
I mean, and how many gigabytes of information do you have stored now?
Well, I mean, no, not gigabytes, terabytes.
Or terabytes, excuse me.
Well, now I'm up to, because I backed everything up, and it's really not a lot in the scheme of things. But I mean, when you consider that it's mainly just on the stock indices right now, I have 8 terabytes of data stored, of data and programs where I've looked at things and I do crazy stuff like this, and I'm working on this. And this one here, I have a friend that's been he's a PhD statistician, and I was talking to him on Sunday about this, and how I have to program this and ask the questions to make sure that I'm doing it right to get the probabilities to work forward. And he happens to like to trade, so I trade. He likes to see what I'm doing, and I like to obviously get a firm opinion on that I'm doing this correctly. So as I say, I'll go through here, and this is I can use dynamic array functions to get what I want, and I'm kind of just learning how to do those, which are it's kind of fun. And when I get through, this is the kind of stuff that you can look at on a shorter term basis that I think is more powerful than looking at generalized statistics, like saying PPI, the CPI in May is, down a lot. You can take a look at these daily things and say, well, does the daily data support that? And I think this is looking at it like what's happening in the here and now is more important than looking at the overall statistics sometimes.
Market Trader on the other side in the chat is asking, if you could look over there, it says, do you make that spreadsheet by hand? And can you post it online?
Do I make it by hand? It's
do you make the spreadsheet by hand? Can you post it online?
No, it's first of all, I would never post it online. It takes that program. I mean, I've rewritten versions of that program dozens of times. And that program itself has a lot of data in it, and I'm going to use it for a lot of things. But when you program, you download the data you want to ask the questions to, and then you have to program in what you're going to ask, and it's a matter of knowing how to program. Is my screen still showing? I'll pop up here real quick. Let me go back and grab that right here. Now, this program actually has a lot of stuff in it. It's like this is the code, and I'll show this because if you can figure this out, you're doing well. This is the code for this row, and here's the code for this row, and that's only part of the code. But because the other part of the code, there's a hierarchy of the conditional formatting. That's a whole different section of code that overlies this code, and that is these are the rules. I mean, there's lots of rules in here, and that's only like a quarter of the rules I'm going to need to do this. So you got to code what you're looking at, and that code is picking up stuff from other code in other places to figure out what days to look at, and then you got to say what do you want to look at in those days, and you can color code what you're looking at in the days, which is what I'm doing, and then there's a hierarchy of what you're looking at within that. So you got to manage the rules so everything works right. So it's a lot of work, and the whole purpose of that work though is to find ourselves an edge to say, if something happens, what's the probability of something else happening? That's if this happens, then what else? Then what? And if you get enough conditions and can do it enough, and I'm finding more and more more and more edges, and I just keep refining these programs, and it enables me to like make calls that are pretty good, and I'm working on several programs. I'm always updating and upgrading my programs, and they always get better. And I start by looking at quarterly data, then I look at monthly data, then I look at weekly data, then I look at daily data, and I kind of work backwards in what I'm looking at to get an idea about where I see things going and what kind of trade to make to profit from all the work.
Right.
So and I have a lot of what I do. I've programmed in a lot of things that I look at. I mean, and it just keeps getting more sophisticated. Well, hopefully the sophistication also reaps more profits. And
right.
I have I work really hard at it, as Danny said. It's getting more interesting. And that was just a little bit more elaborate look at what I've done before, and I'm going to do more elaborate work as time goes on because I can't.
Right. Well, Rich, let's wrap this up because we wanted to kind of bullet point this out a little bit. But why don't we conclude it by just giving? I'm going to conclude my thing by saying that I think that we're in for a big leap in volatility tomorrow. Obviously, I'm looking for higher prices, as I said, but I think that there'll be. I don't think this is just going to go straight up without a little bit of a battle. And I also think that we're up against big resistance in the S&P. And while it may go up, I still think that if you're day trading like I do, you just got to be patient for the pullbacks. And if the S&P drops hard after the number tomorrow, I'm going to try to buy it and try to hold it. And other than that, I'm still thinking that we got a couple of rough days ahead of us. How could you summarize in just a few words how you feel about it?
I the next couple of days, I still think the pressure is to the upside the next couple of days, but I think by the beginning of next week, the end of this week and the beginning of next week, it's gonna fly.
Okay.
I mean, right. it may fly tomorrow, but I think next week could be a really big week. I mean, I'm looking for a lot between now and the end of the month.
Yeah,
and the first.
I think there's a lot coming toward our way going into the second half of this month.
Danny, you can comment on this. One other quick comment, because I think the market loves to get to quarterly expirations and be near a high or near like a low. If they've had a pullback, but I could see us going into the quarterly expiration in June at new all-time highs.
Yeah. Well, I will say one thing before we close it up, that Rich is somewhat of an exception to a lot of the periodicals that are out there, that a lot of people saying, hey, we're in for a rough couple of days, and we only got about 7 hours, no, 10 hours until we'll figure that out. So we're going to leave it like that, everybody. Thanks for coming in. Rich, as always, thank you very much. And we'll see you guys on the flip side. All right?
Sounds great.
Okay. Thank you very much, everybody.